this is Robert Mulby with Singular Research. We are an independent performance-based research firm. We incepted over 20 years ago, and we're well known for our performance, nearly doubling the return of the S&P 500 and the Russell 2000 over that period of time. We focus on companies that are underfollowed, unloved, and undervalued. We are frequent contributors and guests on major national financial media, including CNBC, Fox Business, Wall Street Journal, Bloomberg, and other outlets. Oftentimes, we have a call that we feel is very, very compelling in the near term, and today we have one of those. It's a company that has quite a catalyst, which we'll get to in a moment. But first, let's take a look at our disclaimer. Okay, it's a risk disclosure, going over all the, so we dot our I's and cross our T's. It's our risk disclosure. Let me share the screen for that, if I may. Let's see here. And here it is. Okay. So we are under no responsibility to update our research. Without notice, we may offer a contrary opinion. These views expressed in this research report accurately reflect the responsible analyst's personal views about the subject, securities, or issues. No part of the analyst's compensation was, is, or will be directly or indirectly related to the specific recommendations. Millennium and its affiliates, including Singular Research officers, directors, and employees, excluding analysts, may from time to time have long or short positions and buy or sell the securities or derivatives thereof of covered companies referred to in the research report. They won't execute on any new recommendations or change after the first 48 hours of the dissemination of the original report. The client should consider whether any advice or recommendation in this report is suitable for their particular circumstances, and if appropriate, seek professional advice. Certain transactions, including those involving futures, options, and derivatives, give rise to substantial risk and are not suitable to all investors. Okay, let's jump into the report. Bear with me while we find it, pull it up, bring it to the forefront. Okay, here it is. We just have to make sure that we are framing this in the presentation properly. All right. Let's see, here it is. Let's see if this can capture it. And here it is. Okay. All right, here we go. So the report is titled Throwing the Dog a Bone, Why BarkBox is 90-cent and $1.10 proposal prices for silence. It prices for silence, not for value. We see the price at about 92 cents now. This report came out about a week ago. This is a company with a market cap of about 165 million and net cash of about 55 to 65 million. The underlying business, the company is transitioning from a pure subscription toy box to a diversified pet lifestyle platform spanning DTC, commerce, and Bark Air. Management is prioritizing profitability and cash preservation in a tariff-distorted consumer environment. With a balance sheet now delevered and a non-binding 90-cent per share take private bid on the table, Bark has become a classic asymmetric small cap value situation with limited downside around the cash and asset value versus meaningful upside if commerce and Bark Air scale. shows some of the performance. It's been in a downtrend, hurt a lot by tariffs and new product introductions and trying to get the mix correct. The recent call Q2, their fiscal Q2 call, they focused on diversification is working. The Commerce and Bark Air reached 26.5% of revenue, highest in history. And Bark Air delivered its strongest quarter yet, validating its pricing power and brand elasticity. Profit discipline remains the priority. Marketing spend down 18% to protect cash. The acquisition now focused on higher value super chewer customers, not lower quality subscribers. Hurt by the tariffs, uncertainty. They've delayed warehouse wholesale orders and compressed gross margins due to freight and product mix. Management declined full year guidance due to this, but they are maintaining a conservative stance. Balance sheet reset. The company bought back and retired $43 million of convertible notes, leaving the company basically debt free. Is this 90-cent take private bid too low? We feel it is. We feel that it undervalues the company. At 90 cents, they're buying it for 0.22%, 22% of revenue, and 4 to 5 times normalized EBITDA. This is a deep distress level pricing. For a national consumer brand that has over 2 million active dogs in its database, expanding retail distribution, and high gross margin IP. The bid came immediately after the tariff distorted quarter and the margin compression, opportunistically before Bark Air and the commerce initiatives, which are new, reach any scale. So conservatively, we project a 7 multiple and about 27 to 40 million EBITDA, and gives it an enterprise value of about 190 to 280 million, about $1.50 to $2.50 per share. So the conclusion is the 90-cent bid undervalues Bark by about 40 to 60% relative to normalized intrinsic value. It prices the company as if the growth is permanently broken, which the Commerce and Bark Air data contradict. This shows recent data in, our estimates, very conservative ones, showing a recast of 420 million in revenue, growing to 500 million in the next 2 years, generating 30 million in EBITDA. Balance sheet is debt-free. Currently, we estimate about 55 million cash, 95 million inventory, 200 million equity. A few questions. How quickly can margins normalize? Management responded, indicated freight and data sourcing actions are underway with normalized input costs. Gross margins should rebound to the 60-63% area. How real is Bark Air as a business? Well, they feel it is a multi-million-dollar revenue just in its nascent stages, and they feel it's a premium brand. And it can scale. Is commerce structurally lower margin? Yes, but it's volume accretive. It improves brand reach, creates cross-sell funnel back to the high margin direct-to-consumer products. Does Bark need to sell itself? No. With the retired debt, it has ample years of runway. That's why the 90-cent bid lacks urgency. What would cause a higher bid? Well, a few quarters of good fundamentals. That'll definitely do it. Quickly moving its intrinsic value to $1.52. There are three estimates on the street with an average mean target of $2.33, led by Jeffries with the $3 price target, over three times its current price. Conclusion we have is it's a BARC is being valued by the market and by a take private bidder as if it were melting ice cube. And in reality, it's a restructuring consumer brand with real optionality if commerce and BARC Air now operating from a deleveraged balance sheet. Again, we put it in the $1.50 to $2.50 range. The new bid came in right after the management bid for $1.10, again to take it private by GNK Holdings, led by Marcus Lemonis, who is, I guess, a CEO celebrity. He was involved with Camping World, and then now currently, I think, the chairman of the new Bed Bath & Beyond, a $15 billion enterprise market cap. So we feel it's a serious, doable offer. They came in and they offered $1.10, about a 20% premium to the previous offer of 90 cents by management. Strategically, that's not merely a reoffer from the same group. It's a significant escalation and a premium to the first offer by Great Dane Ventures, which is a management group, and brings to bear Marcus Lemonis's involvement in his name, in his companies, in his assets. So there you have it. Normalized, we think $1.50, $1.60 in the current conditions. And these two bids are quite a bit below that. So we feel there is an opportunity for investors to step in, and hopefully another bid emerges as at a fairer level and to take advantage of that again. So thank you. Feel free to call if you have any questions, 818-222-6234, or email research@singularresearch.com. Visit our website, singularresearch.com. Sign up for a complimentary subscription. The micro cap, small cap equities are leading the market so far this year, and our research says some good room to go for the year. So thank you, everybody, and thank you for your time, and feel free to reach out to us for any questions or research on this matter. Okay, have a great day.